Welcome to today's episode of Furniture Industry News for November 1st, 2024. We'll cover the latest developments from High Point Market, retail performance, and consumer confidence trends affecting the furniture industry. The recently concluded High Point Market demonstrated remarkable resilience in the face of multiple challenges. Despite concerns about the upcoming election, recent hurricanes, and economic uncertainties, attendance only dipped by 2% compared to previous markets. This relatively stable turnout speaks volumes about the industry's strength and commitment. Large retailers showed particularly strong engagement, with attendance from this segment actually increasing by 3%. The market authority also reported increased press presence and strong international buyer participation. Transportation services saw significant growth, with ride services up 12% compared to previous markets. Perhaps most encouraging was the sentiment among retailers at the market. According to a TD Bank survey conducted during the event, nearly half of retailers expect home furnishings purchases to increase during the first 6 months of 2025. While some concerns remain about economic uncertainty and the upcoming election, the overall mood was decidedly optimistic. The market's digital engagement also showed impressive growth, with the High Point Market app usage increasing to 15,000 users, up from 9,900 at the previous market. New buyer programs were particularly successful, with over 100 new buyers participating in the market tours and hundreds more engaging in pre-market educational programs. The latest consumer confidence data brings encouraging news for the furniture industry. October saw a remarkable surge in consumer confidence, reaching its highest point since January, with the index climbing to 108.7, up significantly from 99.2 in September. This marks the biggest monthly increase since March 2021. Breaking down the numbers, consumers' assessment of current business conditions turned notably positive. The percentage of consumers viewing business conditions as good increased to 21.4%, while those rating conditions as bad decreased to 16.4%. This shift in perception suggests a more favorable environment for retail spending. Looking at future expectations, consumers showed increased optimism about business conditions and income prospects. The number of consumers expecting business conditions to improve rose to 21%, while those anticipating worsening conditions dropped to just 13.2%. Perhaps most significantly, concerns about a potential recession have fallen to their lowest level since tracking began in July 2022. Consumer purchasing plans also showed positive trends. On a 6-month moving average basis, plans for buying homes and new cars continued to increase. Plans for dining out and hotel stays saw notable improvements, indicating greater consumer willingness to spend on discretionary purchases. This broader spending confidence typically correlates with increased furniture and home goods purchases. The data suggests consumers are becoming more comfortable with the economic environment, despite ongoing concerns about interest rates and inflation. This renewed confidence could translate into stronger retail performance as we move toward the holiday season and into early 2025. Let's turn our attention to the performance of major furniture retailers in the third quarter. Several key players have released their results, showing mixed performance across the industry. Havertys has reported encouraging signs with improving store traffic, though their operations were significantly impacted by recent hurricanes. Their stores faced closures ranging from a few days to nearly 3 weeks in some locations, particularly in the Carolinas and Florida markets. Ethan Allen saw their consolidated net sales decrease by 6.1%, landing at $154.3 million. While their retail segment remained relatively stable with just a slight 0.6% decline, their wholesale business experienced a more substantial drop of 13.4%. Despite these challenges, they maintained strong cash positions with no outstanding debt. Wayfair's results show the ongoing evolution in the e-commerce space. While their total revenue declined by 2% to $2.9 billion, they've made significant strides in improving profitability. Their focus on operational efficiency has helped them reduce their net losses by more than half compared to the previous year. Sleep Number faced more substantial headwinds, reporting a 10% drop in net sales to $426.6 million. However, they managed to improve their gross margins through cost reduction initiatives and improved operational efficiency. These adjustments helped offset some of the impact from reduced consumer demand in the mattress sector. These results reflect the broader industry challenges of navigating uncertain economic conditions while maintaining profitability through operational improvements and strategic adjustments. That wraps up today's furniture industry news update. We've covered a lot of ground, from high point market attendance to major retailer performance and shifting consumer confidence trends. To stay informed about the latest developments in the furniture industry and never miss an episode, please subscribe to our podcast. Thanks for listening to Furniture Industry News.